Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies and Palantir Technologies. If you want more videos on SoFi or Palantir, go ahead and annihilate that like button right now, comment down below your thoughts on SoFi's recent earnings report, and if you think Palantir is a good long-term buying opportunity, because in this video we will be dissecting and analyzing 4 articles, to where the first one is titled, SoFi Technologies Q1 Earnings Beat Estimates on Higher Segment Revenues, Boosts Full Year 2023 Outlook, which is very good news. After that, we'll talk more about SoFi Technologies regarding how the company has remained optimistic regarding their future profitability and their overall growth trajectory, in which the company could be GAAP profitable by the end of the year, and this most recent earnings report has solidified that very projection. Lastly, for SoFi Technologies, we'll talk about how their next quarter earnings report will also be very positive, thus leading investors to more gains, and I'll also talk about why the share price is falling right now, which is exactly what I said would happen in a previous video. I said we would see a pre-anticipatory run where the share price will increase slightly, and then after that we will see the company pull back in their overall share price. This has happened consecutively for almost every earnings report, and that's why the SoFi share price is pulling back right now, because it's adjusting from their pre-anticipatory run, but I'll talk more about that later. Lastly, we'll talk about and discuss Palantir Technologies regarding their new platform called Palantir AIP, regarding their overall artificial intelligence and how it's going to be integrated into their other platforms such as Foundry, Apollo, as well as Gotham. So for more videos on SoFi Technologies as well as Palantir Technologies, don't forget to go and annihilate that like button, comment your thoughts down below, and without further ado, let's jump right into today's stories. SoFi Technologies, if you didn't know, essentially operates as a digital bank, and this is a very innovative fintech company. SoFi Technologies, ticker symbol SOFI, ticker name SoFi, recently released their overall earnings report, which is very positive. In quarter 1, the company ended up bringing in a loss of 5 cents per share regarding their earnings per share, also known as EPS, which actually beat estimates by 3 cents per share. And this is extremely positive. The overall consensus predicted that the company would bring in a loss of either 7 or 8 cents per share, but they only brought in a loss of 5 cents, meaning that they are improving on their overall earnings per share. On the other hand, we also have great news regarding their revenue, to where they brought in $460 million, which equates to a 43% year-over-year growth rate, beating estimates by $23.22 million. This company is broken up into 3 various segments, which gives them revenue, to where their lending segment brings them in the most revenue, to where they generated around $325 million in this segment, which represents an increase of 33% compared to last year. Apart from their lending segment, they have their financial services segment, to where that segment brought in revenues of around $81 million, and then lastly, they have their technology segment, which brought in approximately $78 million, which corresponds to a 28% year-over-year growth rate, which is amazing. I also want to say that their adjusted EBITDA stood at $76 million at a 16% margin, exceeding forecasts and projections from professionals, to where many thought they were only going to bring in between $40 to $45 million in this segment. So financially, this company beat on their revenues, earnings per share, as well as their EBITDA estimates, meaning that this is very good news for this overall company. I also want to make you aware how SoFi added around 433,000 new members, to where now they have approximately 5.7 million customers, which is very positive. On top of that, their deposits increased by $2.7 billion on a sequential basis, which now exceeds $10 billion in total. I also want to make you aware how this company is fundamentally strong, because they have $2.5 billion worth of cash and cash equivalents on their balance sheet. So when we look at this company financially, they are very strong, stable, and resilient, meaning that the future projections and growth of this company are going to come eventually. This then in turn will reflect on a higher share price, to where SoFi Technologies will bounce back stronger than ever, giving profits and building value for their investors. Now, for the full year of 2023, the company actually raised their adjusted net revenue guidance to be between the range of $1.955 billion to $2.02 billion. And again, this future growth adjustment is very positive, because they are increasing and they are raising their overall net adjusted revenue that they could bring in. So honestly, this company company is looking absolutely phenomenal, and I am very excited for not only the future earnings report, but eventually when this company becomes profitable, because that's when the share price of SoFi Technologies will really start to take off. Now let's hone in on the overall profitability of this company. The CEO in the earnings report even commented, and I quote, "We delivered another quarter of record financial results and generated our 8th consecutive quarter of record adjusted net revenue, which was up 43% year over year," end quote. And that came directly from the company's CEO, or Chief Executive Officer. This means that SoFi Technologies has beat on their overall earnings projections regarding their net revenue literally for 8 consecutive quarters in a row, which is phenomenal. And because of this, initially the shares of SoFi stock jumped by around 7.5% up to $6.70, and I predicted that in my last video, saying that after this earnings report, the company is set to surge. And then I said, after the pre-anticipatory run and after the earnings report, this company will pull back in their overall share price, which is what's happening right now, to where the company now is pulling back by around 10%. This means for investors who have invested in the beginning of 2023, they are up around or approximately 30 to 35% on their overall investment, absolutely decimating returns that they would have gotten from the overall stock market, making SoFi an amazing overall investment for investors. Now, how low can SoFi Technologies go? Well, I personally only have around a 4% allocation to this company, and I'm not going to buy this company unless it falls to around the $5 range. Then I'm going to buy the company, because at that point their accounting ratios would be so good that I can't help but buy this company. But it really just goes to show you that our predictions were 100% correct in our last video, saying that the pre-anticipatory run will surge between 5 to 10%, and then after that we will see a pullback in the overall share price, which is what's happening literally right now. So it's great to see how our analysis was correct and our prediction came out to be very true. But apart from this earnings report and the last earnings report that they will bring in for 2023, in which the company could become profitable at the end of the year, what about the literal next earnings report after this one? What could we expect? Well, first I want to quote one more time directly from the CEO of the company regarding the bullish positiveness surrounding this company right now. And even though, yes, the company is pulling back, this is a great buying opportunity for investors who are not already overexposed more than a 5% initial portfolio allocation, because anything beyond that means that you are taking on unnecessary risk of potential losses as an investor due to overexposure. And we here want to practice proper risk management. But I really want to make it obvious how this earnings report was extremely positive. And don't take it from me, take it straight from the CEO and the management of the company, to where he says, total deposits grew by a record $2.7 billion, up 37% during the quarter to $10 billion at quarter end. And 90% of SoFi money deposits, inclusive of checking and savings and cash management accounts, are from direct deposit members. For new direct deposit accounts opened in the first quarter, the median FICO score was 749. More than half of newly funded SoFi money accounts are setting up direct deposit by day 30, and this has had a significant impact on debit spending. With our launch of offering FDIC insurance of up to $2 million, 97% of our deposits are insured at quarter end. SoFi is attracting very young high earners who are stable and are not at risk of defaulting on any of the loans that they are borrowing or any of the products that they are using from SoFi. An average FICO score for the members that have opened up accounts of 749 is very impressive, to where even if the economy collapses, these types of customers will remain extremely resilient. On top of that, SoFi is not at risk of a bank run, and they are actually growing their overall deposits instead of losing their overall deposits, because their deposits grew by $2 billion. And the reason for this is because they are offering FDIC insurance that goes up to $2 million, meaning that 97% of their deposits are insured. Normally, FDIC insurance only goes up to around $250,000 at regular banks, but because SoFi Technologies wants to give that peace of mind to investors, investors are flooding and flocking to this company for safety, resiliency, and overall stability, making this company absolutely phenomenal as a digital bank, and they're really doing the right things. But what does this mean for the next earnings report? report? Well, as of right now, management's guidance and projections and estimates are very positive for their next earnings report. They believe SoFi Technologies could generate between $470 to $480 million on an adjusted net revenue basis for the second quarter of 2023, which would mean that they are growing between 32% and 35% on a year-over-year basis. As we've talked about in prior videos, companies who are growing at a CAGR or a compounding annual growth rate in regards to their net revenues of over 30% means that these companies are rapidly expanding. So essentially, yes, you would want to get into this company now while it's cheap before they become profitable and really truly start to scale and impress investors. But that does not give you permission to over-allocate yourself and take on unnecessary risk by overexposure through buying too much of this overall company. We need to be smart investors who are managing our risk well so we can make profits and build our value and wealth over the long term, because that is how you become wealthy. Now, overall, for SoFi, I think the earnings report is phenomenal, that this pullback was predicted, and it really shouldn't catch any of my subscribers by surprise, considering we literally went over this scenario in our last video. So overall, I am very impressed with SoFi Technologies. I still own SoFi Technologies in my portfolio, and I can't wait to see what this company makes of themselves literally this year. Lastly, let's briefly talk about Palantir Technologies, ticker symbol PLTR. Palantir Technologies is in the news today because they have released their fourth platform called Palantir AIP, and it's a game changer. Palantir Technologies, if you didn't know, is a leading software and data analytics company that serves both commercial enterprises as well as government clients. Palantir Technologies, ticker symbol PLTR, is one of the best companies regarding analytics on the stock market right now, in my opinion. Although, yes, the company is trading at a premium right now, the future trajectory and projections of this company are very impressive, especially now that they've come out with a fourth platform. Palantir Technologies is mainly known for three platforms, being their Foundry platform for commercial enterprises, their Gotham platform for government clients, and then their Apollo platform, which updates both of these. But now they have a platform that integrates artificial intelligence to a whole new level, which is very good, which hopefully will lead to a positive impact on revenue, growing customer value, and hopefully increase their overall brand awareness in the market. If you're wondering, Palantir AIP stands for Artificial Intelligence Platform. So this literally is Palantir's artificial intelligence platform, and right now it's poised to revolutionize the way Palantir customers access and utilize artificial intelligence in their day-to-day work. This platform is supposed to be a comprehensive solution that combines and integrates the best of Palantir's existing platforms. And if we pair it with their advanced machine learning capabilities, this will grow customer value hand over fist. Businesses of all sizes will benefit from this overall new platform, and I can't wait to see how this positively impacts not only Palantir's ability to maintain and retain current customers, but gain new customers as time goes on. This platform mainly will do four things. First, it will enhance their overall data analytics decision-making potential, meaning that as Palantir crunches large amounts of data and numbers and uses artificial intelligence, it will communicate to the management of these companies the best data-driven decisions to make through Palantir's platform. Next up, it's going to optimize the existing platforms, making Palantir all around just a more technologically advanced company. The third thing this is going to do is it's going to increase their overall predictive analytics, which will help dictate where future companies could be. Meaning that if you are a marketing company, you want to use this type of technology to understand what customers want to see, when they want to see it, and how you can convert your advertising to actual sales. Lastly, it's also going to increase their overall personalization regarding their customer experience, making it more consumer friendly. So all of these are going to be phenomenal things that are not only going to drive overall customer loyalty, but also future revenue. The launch of Palantir's AIP platform is anticipated to increase overall adoption, especially as artificial intelligence is truly the talk of the town right now. Many people are talking about artificial intelligence, and it's really in the mainstream. And this growth and adoption of artificial intelligence will benefit Palantir greatly, considering that they were one of the first movers in this overall space regarding artificial intelligence in data analytics. This is going to lead to new revenue opportunities and hopefully more opportunities for them to solidify existing partnerships. This technology will not only lead to higher revenue opportunities, but also it's going to optimize platform licensing as well as subscriptions. Right now, their platforms are on a subscription model, which historically have led to the greatest number of revenues, and this is just going to further that overall point and business model. It's also going to help optimize professional services to where Palantir can now offer professional services to teach their consumers how to properly integrate and use Palantir's artificial intelligence in their existing system to help benefit their customer. This will then drive future partnerships and collaboration between Palantir and their customers. Next, they're also going to use this to expand into new industries and markets, which means Palantir's overall addressable market is increasing, meaning that the future of this company has evolved to where the share price now has a larger growth trajectory. On top of that, it's going to allow the company to upsell and cross-sell between their overall platforms. And last but not least, like I've already mentioned, this will enhance alliances and partnerships between not only existing customers, but also new customers that they are bringing in due to this very innovative technology. All in all, we can conclude that this platform will lead to higher revenues in the future, and this should lead to a higher share price for investors as long as they have a long-term growth trajectory ahead of it, because right now, yes, Palantir is trading at a premium right now. The author even says that he doesn't anticipate that Palantir stock will go up much after an earnings report or even after this platform has been released. However, he is excited how Palantir is set to continue in their overall profitability for the second quarter in a row, which should put some investors at ease, especially with revenue growth coming in between 15 to 20%, which is pretty healthy. Lastly, I want to make investors aware, or people who have not invested into this company, that fundamentally the company is solid. We're honestly just waiting for this company to grow their value over time. This is a slow burner company, so unless you plan to hold this company for the next 5 to 10 years, then this might not be the company for you. But why are some people choosing to invest into it now, even though it won't pay off until the long term? Well, first reason is that for a growth company, which normally has debt, this company has virtually zero debt. Next up, they are cash flow positive and they are profitable. And then the greatest thing, in my opinion, is that they have over $2.6 billion worth of cash and cash equivalents on their overall balance sheet. So with no debt, tons of money, and considering the company is profitable, they are extremely safe, and over the long term, they are anticipated to grow value for their overall investors. So this is only for patient long-term investors, and if you want a quick payout, then this company probably isn't for you. But if you are like me, who has a small allocation to this company, who is willing to hold this company for the next decade, then feel free to do your own research and look further into this company. But those are the news updates for SoFi Technologies as well as Palantir Technologies, and if you want more videos on Palantir or SoFi, go ahead and annihilate that like button right now, comment your thoughts down below, become a member so you can support me personally so I can continuously make videos just like this for you, subscribe if you are new, and I'll see you in the next YT video.